Hello listeners, I am Rahul Agrawal, Senior Economist at ICRA Limited, and through this podcast, I will be sharing ICRA's views on the state of investment activity in the Indian economy. The year-on-year performance of investment-related indicators was mixed in Q4 FY23. Although 5 of the 10 indicators witnessed an improvement in their year-on-year growth relative to Q3 FY23, this was partly on account of the favorable base related to the third wave of COVID-19 in India during January and February 2022. When compared with the pre-COVID levels of FY19, the growth performance of 6 of these indicators improved during Q4 relative to Q3. The value of new project announcements surged to a record high of Rs 12.4 trillion in Q4 FY23 from 7.2 trillion in Q3. However, this sharp uptick was dominated by a few big ticket announcements such as Air India's aircraft order, some power sector projects, and proposals for data centers, highlighting that capex proposals were not broad-based. The private sector continued to dominate for the 10th consecutive quarter in Q4 FY23, with its share in total proposals remaining high at around 92% in that quarter. As per early data, the value of completed projects declined to a 7-quarter low of Rs 1.2 trillion in Q4 FY23 from 1.7 trillion in Q3, with the government sector continuing to dominate in completions. Mirroring the trend seen in the last 6 quarters, project completion was largely concentrated in the transport services segment, which includes infrastructure projects such as roads, railways, airports, and ports. Capacity utilization levels inched up marginally to 74.3% in Q3 FY23 from 74% in Q2, notwithstanding the festive-led pickup in demand for goods in the quarter. We expect capacity utilization levels to have risen further to around 75 to 76% in Q4 FY23 as per the seasonal trend of an increase in production in the quarter, with some drag stemming from lower merchandise exports. However, the capacity utilization level is likely to moderate sequentially in Q1 FY24, similar to the trend seen in the past years. The year-on-year growth in stamp duty collection of 25 state governments, a proxy for property sales, more than doubled to 19.2% in Jan-Feb 2023 from 9.2% in Q3 FY23, boosted by the low base of the third COVID-19 wave witnessed in Jan-Feb 2022. Overall, the housing demand remained buoyant even as sentiments have dipped modestly amid rising interest rates. In terms of government capex, the Government of India has indicated a 37% expansion in its capex target to Rs 10 trillion in the FY24 budget estimates. While the combined capex and net lending of 26 state governments, excluding Sikkim and Tripura, is expected to rise by around 16% to Rs 8.7 trillion in the FY24 budget estimates. If the budgeted capex levels of the Government of India and the states materialize, it would have a multiplier effect and thereby support GDP growth in FY24 amidst growing fears of a global slowdown. However, timely execution remains key. Finally, as per the data released by the MOSPI for March 2023, the pipeline of central sector infra projects that are scheduled to be completed in FY24 now stands at a massive Rs 10.5 trillion, with around 71% of the projects concentrated in 4 key sectors, that is road transport and highways, railways, petroleum and power. Out of these aforesaid projects, more than 80% of the anticipated cost of completion has already been spent on projects worth Rs 4.1 trillion by March 23. Even if only these projects are completed during FY24, it would exceed the year-ago completion of Rs 3.1 trillion by a healthy 1 trillion. Thank you for listening and stay tuned for our upcoming podcasts.